Good morning, traders, and welcome to the Bookmap live trading webinar. This is Bruce at Bookmap. Good morning, and all right. Well, it's been a while. I was working on some new educational courses coming out for you guys, so had to kind of forfeit some of the live webinars for a bit, but we're back, and let's get started. So, general disclosure. All Bookmap Limited materials, information, and presentations are for educational purposes only and should not be considered specific investment advice nor recommendations. Risk disclosure: trading futures, equities, and digital currencies involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. Okay. Just a note here on Friday, it is Good Friday. The markets are closed. We will not have webinars. No one is going to be scheduled for that time. So anyway, let's jump in here and take a look at the S&P. And let me get caught up. I just have a bunch of questions here already. So let me double check here. Thanks, Rob. Audio and video good here. We're all set to go. Okay. Good morning, Scooter. Okay. Yeah. Can you hear me now? Audio and video over in Discord. Let me quickly go through that risk disclosure one more time. Okay. Yep. Thanks for that. Risk disclosure: general disclosure. All Bookmap Limited materials, information, and presentations are for educational purposes only and should not be considered specific investment advice nor recommendations. Risk disclosure: trading futures, equities, and digital currencies involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. Okay, I got that out of the way a few times now. So hold on just a second here. Okay, just need to follow up on a few questions here really quickly. All right. Okay. I think we're good. All right. Let me jump in. So what's happening here? What's happening with this S&P? Well, let's take a big step back, take a look at the bigger picture. I mean, it's been rather chaotic. Lots of stuff going on in here, and you can see it in price. I mean, these are pretty, big swings back and forth. Here's the daily on the left hand side, the hourly in the center here, and the 15. No, this is a 1 minute, 15 minute here on the right side. I was keen on this level the other day, and you can see we kind of closed above it, and then saw some of the momentum the next day. This thing was going to rip up into here. I don't know how you guys felt about that. I thought that was a pretty easy look at things in here. That if it has enough momentum to get through this swing up here where sellers dropped it here, then the next area is probably going to be either point of control of this little area in here, or just an area where price traded a lot. Okay, I'm not going to get into volume profile. That's Tom B. He'll go through that in the webinar right after this one. But just to understand auction theory, and we're going to apply it to everything in here. We're going to look at horizontal lines, diagonal lines. We're going to look at even candlesticks, and we're going to talk about the auction within them. Where if price can get up into those areas and through it, the next area are the swings up in here, and that's precisely where we are. Right, so I am looking for profit taking up here, as well as sellers to maybe potentially engage somewhere up in this area in here. Now it's a pretty big area, but we've had an easy, nice run up to it through this area, through here, and now it's going to get a little more difficult. At least that's the way I kind of look at it. Let me see here. Any questions over in YouTube? No, we are good. Okay. All right. Any questions in here? No, we're all good in Discord. Okay. All right, let's take a look at this S&P. And you can see that, yeah, the slowdown has already taken kind of place. We had the move up, pretty strong momentum on the move up. Sellers come in this area here, as you can see. Now this is where we can start to look at some of the market structure as well, and start to understand the traders within these areas in here, and you can see it very clearly. In fact, look at the volume here up into this area here. All right, now we can just draw that across, and we can see that that's going to be a rather important area. In fact, I would say it even starts here. I'm going to go with this swing in here because the market seems to be reacting to it. We can see that the sellers took it down below. Buyers tried again. They could not take it back up. Okay, this is significant in this area here. The buyers couldn't take it back up, even with the buying pressure coming in here that we see. They couldn't take it back up further. Okay, so yeah, I would still be bullish in here. No question. I would be looking for a pullback. I'd be looking for more buyers to come in here to test up here, and then the breakout up above. That did not unfold whatsoever. So we get the next clue here. There's not enough buyers in here. We start to see the sellers really, to be honest, it's down in here at the bottom of the edge, and they break it. They break it down into where these buyers broke it out from here. Okay, market structure and the volume and the order book within these areas in here is you just can't make this stuff up. It's here, and the market reacts to these areas in here. So we can see that it broke down here. Now look at our new zone. Okay, this zone broke. Now it's the backside of that. Enough buyers? No. Heavy sellers? Yes. We're looking for it to break down. Okay, and I don't have enough data in here to go back. Here I can add a little bit. And let's see what we get here. Anyway, some heavy selling, again, heavy selling, and now some real back and forth in here. We just had the Jolt's job report, I believe. What was it? Yeah, and yeah, I mean, you know, I don't even know what the data means these days anymore. It was a negative number, and yet, you know, we see the move to the upside here. So yeah, I'm a little confused on data these days, like just not quite understanding what these numbers mean. Obviously, when it was a bad number, we were getting a positive move, meaning that the Fed wouldn't raise rates. But with what's going on in the banking sector now, that's already like a, you know, they're not going to be lending as much. So now the data might shift, and bad data actually means bad information. But anyway, reaction to the number, it was a negative number. The move was to the upside. Okay, so now we can see this move in here. These buyers in this smaller time frame are in control of this move. We have gone back and forth in here between this level. So between 62 and this 54, 55 area down here, or 55 and a half. Okay, so here come some buyers, and let's see if they can pop it now back up into this 62 here. Looks pretty good, and yeah, looking for the follow through up into 62 here. All right, and then maybe if we get enough, maybe we can come up into this next previous level up here at 64 and a half or so. Okay, well, let's zoom in here. Okay, still bullish. Okay, it didn't quite make it to 62 yet. And now we're gonna really look at this area here, because same concept, same ideas we just looked at. Okay, this, if we get sellers down below here, we're going back down to the bottom edge here. Okay, that's what it looks like here. So maybe we'll get even a retest back here. Let's see. And then sellers coming in, and let's see if sellers can take it down here to the bottom edge, 56. So that was a kind of a quick change once we got below this little area here, and now we're back up above it. Now this is the battleground here at 59 on this very small time frame here. Okay, there's some exhaustion. Looking for more sellers down here. Let's see if we can get that at 58. Nothing yet. No, more buyers. The trap is set pretty nicely here for these get these buyers trapped here. If we can get sellers right below here at 58, it's not happening. So that's what we'd be looking for, though, is the buying here. Let's just mark this up. We'd be looking for big sell dots here. Hold on. Yeah, that should do it, right? Okay. This tool's not working for me. Sorry about that. It should be working. Okay. Anyway, I was trying to draw. Let's just draw it up here. We're looking for sellers down here below 58. Okay. And then the move to stream on down into this liquidity down here, bottom of the range. Still don't see the sellers. Okay, here we go on a retest. This is where they got to see follow through on the retest here. This is key. All right, we got some sellers. They should be able to move it back down here to the bottom of the range now. Let's boy, it is whippy. I mean, like they should be able to follow through all the way down here pretty quickly, but they immediately pull back here. And come on, hit the 55 or 54.5. Okay, there we go. Still looking for this. Oh, okay, it did trade. It did trade into that liquidity a bit. I'm still looking for them to take it here. Let's see if they can take the rest of it. Guys, that was tricky. It kind of did what we were looking for. Let's just talk about this though in terms of like higher probability trade. Okay, so what we're here, and it's been nice to have a break because what we're here for is to go through reading the order flow. Okay, we can talk about the trade management in here. We did a couple weeks ago. And we talked about, well, you know, if you get positioned for something like in this, looking for it to come up to the top of the edge here, put the stop at break even, get stopped out, reassess, look for this trade to work out to the downside. And we didn't quite. We were looking for it. We were looking for it in here, and then here we didn't see the follow through, and we got some back and forth in here, And then it looked like buyers, if they can get back up above this 59, that they're able to take it back up here. They couldn't. We saw the sellers here. That's when we're looking for the retest here. Then here, that follow through down. And that was kind of the thought process in here. Trade management wise, it's tricky. This is, there's a lot of chop in here. And there's a, these are small moves. This is a scalp, of course. But what I mean to get at here is your trade management would have to be very, very quick here. Right. Original move to the upside didn't pan out, but don't give your money back. And in your trade management, you're looking, this should follow through now. Okay, that's one of the things that's nice about order flow, is if this doesn't follow through now, take your stop. Okay, it would have been around break even or maybe a small loss. And then once you see the follow through in down here, stop up above and look for this to follow through. In this case, it had one pretty whippy pullback here, and then it did continue. Okay, now this one's continuing all the way down to the bottom of this range here at 50. Okay, so we're looking at testing the figure here, and we're already there. Okay, now let's take a look at this here. Now this is developed into, good morning, Tony. Nice to see you. This is developed into something a bit more here. So look how we drew up this range here, saying buyers are in control in this time frame, and that is true. Okay, they lost control here. Okay, so that moved down to here, and then more sellers coming in here. Now the sellers are in control. Okay, in this range here between 55 and basically 49, or yeah, let's call it 49. Okay, so yeah, let's see. I'd actually look for a pullback here, kind of at the lows of the day here, all right, or the cash session. All right, so I would be looking for a pullback probably to about here, 52 or so. Just a small time, kind of a small time frame move back up to about 52 or so. Okay, we're just talking about the order flow. It's not a trade idea here, but looking for, we've come down, we've tested the lows, and looking for some profit takers to come in, and a small scalp would be looking for buyers here at 50 basically. Okay, or lack of selling here, which we don't see yet. Okay, there we go. Now it's traded into this liquidity here. Now let's see if we get the buyers above it here. Okay, above 49. And then, yeah, I would look for the first move up to this 50.5 and then up here to 52. Okay, just looking for a pullback here. Okay, we can look at our diagonal lines in here. Okay, so again, just reading order flow in here, and we're looking for something within this order flow to give us insight to the possible direction. And we just haven't gotten the buyers yet that we're looking for. Here's some exhaustion. There's some buying. Okay, here's a retest. Did it sell again? No. Do we get buyers here? No, not yet. So stay away from it. And it continues on. Okay, so now we're at lows of the day here, or the cash. Okay, let's see if we get buyers back up again. So no pullback. We're due for a pullback here, so I would be looking for that soon. Just don't see it. This is something Carmine, I don't know if you guys saw the webinar with Carmine, and a phenomena that he's been looking at, and he said some interesting things in his webinar. Let me find it here. If you guys didn't see it, I'll put the link into the chat for you. It was here, Pro Trader Webinar Series. Okay, so this one here, and let me share it here in YouTube for you guys. Okay, and over in Discord. All right. All right, well, let's see here. We're starting to see some buying in here. Come back in. Okay, if we get enough in here, next move up to our 48 or 49 and maybe even 50 here. Let's see it. Do we get some at this little top edge right here? Yep. Okay, see them pull that liquidity. That's good. Let's see if they add on the bid. We should get some more buyers, and they should be able to move it up and test some of this liquidity here. Okay, that's what we're looking for here. Okay, there we go. Still looking for the move up into about 50 here. So what Carmine was talking about was he kind of shifted and changed. Now, this was really interesting. Carmine's a really good trader. And he changed up his style. So he is looking at support and resistance levels. And he was looking for taking, he was noting the bigger swings. Okay, and you can see that in the daily chart for sure. But like also in some of these moves in here, I mean, these are big swing moves. So, you know, he's looking for, you know, getting into a position down here, and he might try 2, 3, 4 times. You know, take some small stops like 2, 3, even up to like 7 points, I believe he mentioned. Okay, that's a change. Now, obviously, he's controlling his risk by trading smaller. Then once he catches it, though, he's looking for it. Once he catches it, he gets like a 60-point S&P move. And that makes up all the difference. But you have to be there to catch it. If you don't catch it, you just lost a lot. Anyway, interesting to kind of hear that, because these moves have been, look, like this is a pretty big move here to the downside. I would look for the pullback to be pretty big as well. So we haven't really seen too much. Now, it came up to our 49 level. We were looking for 50. Okay, maybe it'll get there. Maybe it's just pulled back here, and we're still looking for it to come up to 50 here. All right, but it kind of lost some of its momentum up here. Okay, just traded up to 49, and that was it. Okay, buyers are still, if we look at the smaller time frame in here, they're still in control though here. Okay, look at the volume bars, look at the volume dots, look at this pullback here. It just came down to here. Okay, and there's still more buying than there is selling in here. Okay, we can even look at CVD in here. If you guys like your CVD, there's divergence. Okay, there it is. Okay, it's right in front of us. In fact, let's put this within our chart range, and we'll look right at it here. Okay, and let me get rid of the icebergs for a second. Okay, there's our divergence. All right, so here's an equal low here. Okay, and here's our low here in CVD. And then here's our low, our low over here, equal low here, but a higher low here. All that means, okay, and this is what's to understand and gain from this. Don't look for a divergence as a signal. Understand the auction in here. There's a lot more buying pressure than there is selling pressure. That's why we would look for, what we would look for down here is not a lot of selling. Exhaustion would be a lot better, or absorption would be a lot better. It hits into these orders down here and they cannot sell through it. Then we're looking for our buyers to come in, and we look for the first test to come up to here, and then maybe up to the recent high, and then maybe our 50 level up here. Okay, so did it already make it there? No, it's come up to our 49 level so far. Okay, and it just exhausted out here. See that? So we will see the sellers come in and take this down. All right, let's see, Rob, a few questions. I've been looking into the importance of stop runs. Yeah. Yes, absolutely. A stop run, it could be a reversal, it could be a breakout, but it's typically high trading, and or high volume, typically. But what is important about the stop run event is what happens after the stop run. Okay, I know it sounds a bit like a cop-out. Guys, this looks good for a breakout here. Let's see if we can get that follow through now up to 50 and above. 50, it was 50 was our first stop, right? Yeah, and then 52 somewhere around up here. Okay, I'm just looking at the volume in here. It looks good. There's pressure in here. They're likely to push it higher. Okay, so if you guys are looking for even a bigger mean reversion trade, well, it would be back up to where we drop from here, right? 55, or here is your point of control of this area in here. All of this transactions in here up to 58 or so. Okay, that would be a pretty big trade back up. Okay, right now we're just looking for our 50 and then our 52. Okay, and it is unfolding. Now again, it's not about calling the market in here. It's not about being right. It's about understanding the possibility of this to unfold and why. Okay, so and we're up at our 52 level now. Okay, but we can read this pressure in here, and we read this move. We read this move back down. We looked at even CVD, and we're still transacting up here. Then we exhausted out, and we saw the sellers bring it down. Okay. Not enough selling pressure to even make it down to here, though. Okay, they can't even make it down to here at 46 or 45 and a half. Okay, and look at the buying pressure up here. They got it. They're going to move it, right? And they're going to test into the higher liquidity up in these levels. And then we looked at our 52 level, but it's already traded a little higher up into the liquidity up here. All right, so but we know why, though. Okay, that's really one I want to get at. Good question, Rob. Let's take a look at some stop runs in here, and some icebergs as well. Okay, so guys, I'm going to switch gears a little bit, and we'll take a look at understanding and reading some of these stop runs in here. Okay, because it's really important. The insight that you're going to get from stops and icebergs is tremendous, I think, in my opinion. Here's why. Because if we're reading the order flow in here, well, now we can dive much deeper, and we can read the actual order types that are transacting in here. And that's amazing, because who's using the order type of a stop loss order here? Okay, or a buy stop in this case. Okay, most likely the majority of them by far is going to be people getting stopped out. Okay, it's going to trigger stops. They're going to say no mas. They're going to get out. They are compelled to buy. They were selling down here. They are compelled to buy up here. Okay, it is a good way to determine where you can find compelled buyers and sellers. look for these traders to be wrong. Right now, what is important about the stop run though is once it unfolds, and here it is here, okay, and the first one, okay, guys, if you find yourself in a kind of an endless loop of always zooming in and zooming in, it's because you haven't you got to click back on this tool here to deselect it. Now you can zoom out, right, to your areas. Okay, so here's our initial stop run is right in here. Okay? In fact, we can turn on the it's not that, it doesn't look like it's that big of a deal here. It is for the day contextually. Okay, and I'm going to get rid of the automatic threshold here. All right, so it's not bad, 356. Okay, so it's only a stop run of a couple levels in here, just two, but the and there's one up here of 18. All right, so yeah, there's our move. Now we have to think about the stop run in terms of the context of what's happening in here. Okay, it broke out. It hit stops. What happened after? It traded back down into the range to at least kind of the top of the range here. Do we see a lot of sellers in here? No. We float back up and we're starting to get buyers again. Okay, so the context here is it broke out, it stopped people out, but we're still finding buyers in here. So we're looking for at least this area here to accept. Okay, now it did, and then it broke out, and then it accepted here, and then it accepted here, and it continued to go higher. All right, so and now it's accepting in this range here, and it just broke out. Now this range did not accept, okay, so far. It's back into the range here. So I'm actually looking for sellers to take it back down to the bottom of the range at 51.5, which we're just about there. Maybe they can also take it down to 50. Okay, and there would be a new range here defined by sellers below 51.5 down to 50. Right? Because of this. Now this is a good example, Rob. Look at the stop run here, and it accepted above it. Look at the stop run up here, and it rejected above it. All right, so we look for the move back down to the bottom of the range. Okay, and it did, and then we're kind of a little bit back and forth in here. Let's see, does it accept back up here? This is the point, back to the point of control here. Okay, or most traded level at this range right in here. Do we see buyers up here yet? No. So these are the two different ways to read this, and these are pretty decent examples, I think, to read your stop run. Okay, and then to gain insight from it, because just because there's a stop run does not mean that this is going to turn around and go back down. Okay, it might accept, and we might find more buyers after stops are popped. That's what we want to determine. Okay, and then here's the same thing. Stops were popped. We're back in the range. We start to see sellers in here. We're looking for bottom of the range. Okay, and then it returned back to point of control. Okay, and we don't see buyers in here trying to get it back up to this high of the range in here. Okay, so we're still looking for it to accept lower here. Okay, does that make sense? Rob, do you have any questions on that? Good morning, Jack. Yeah, that's a lot to kind of go through here, but we can go through it again and again and again. We can go through it in real time as well. Yeah, I mean, we see some stops down here, for example, right? But okay, what happened? Well, buyers came back in. Okay, well, we're back up into maybe point of control here. Okay, no, we're back down here. Again, stops hit again. Okay, that's fine. It's even more stops than previously here. Okay, so now I don't care though. Are there more sellers here? Yep, I'm looking for them to take it lower. Okay, back down to maybe this liquidity down here around 48. Let's take a look at this. 48, maybe 46. Okay. And there's our move. Okay. So that's, and they're still hitting stops down here. People are still getting stopped out. Okay. So anyway, now there's something like, I know Tom, look at that. Wow. Okay. Now there's an iceberg in there as well as stops being hit. This is dirty stuff in here, guys. These markets have not been clean. Look at this. We've seen this move many times, and it's dirty. Yeah, I don't like it, but we have to live with it. We've seen this so many times. Here's a larger player coming in and just dumping, triggering stops along the way. Stops are triggered where? Down here, but they're triggered in here. I posted this in the room the other day as well. And Jack was actually talking about this too, about order book imbalances and larger player being able to come in here and kind of push that bottom edge in here. But basically they're dumping. Like, this is a larger player, has a lot of contracts, and they're able to push it. 97. Look at all these orders in here. So this is probably like 1,000 lot or something like that. Only 97 of them are stops. There could have been a stop up here. There could have been 97 stops up here. They got filled down here. There could have been one stop up here and 96 down here. Right? We don't know that. We know the order and chain of events in here. Okay, and this answers a question that we had in the chat. Okay, it's in. Oh, I can show you where it is. It is in, and thank you, Jack, for your insights on this and feedback. Also, Pete. Oh shoot, where is it? Here, this one. Same. This is the same thing in here. I want to show something, the dirty part of it though. So here, let me just pop it out. Whoa. Hold on. Okay, so here's the image here. Now this is actually something different, a little different, but we'll go through this example as well. And Rob, you requested to kind of look into this with the microscope into some of this stuff. The larger player came in here and dumped, and then all of these 362 got stuffed. We don't know where the stops are. They got stuffed down here though. Okay, and then in here we see an iceberg absorbing all the rest in here. It went against them, but it was over 3,000, I think. I mean, we see 3,000 executed here. There was 4,000 because we see another 1,000 here executed, right? So 4,000 in here, icebergs. Wow, that's a lot, right? And here's our context down here. People getting stopped out, larger players absorbing on the other side here. All right, so that's that scenario, and that's what happened here. Okay, but I want to go over the chain of events or order of events in here. It's in the post, but this order has priority. It is a market sell. Once it is completely filled, if it triggers stops along the way, they are secondary. They are aggressive orders, but this order fills first. Next fills the stops, and that's why you can see them all getting filled down here at this level. All right, and then best bid and offer update after that. Now in this case, the best bid updated first, and then the best offer did. There was another example where the question was, why does the best offer cross over? Isn't that impossible? No, it's not, because of the order of events in here. The trade happens first, and then best bid and offer update. Right? Okay, chain of events in here very similar. Here's our move. Here's our stop run here. Okay, just here. And then now you can see the crossover here. The best offer crosses the best bid. It updates. Nothing transacts in here. Okay, just the update occurs. Right? Then it starts to transact. Now the wicked part here is this player here likely dumped and then threw his iceberg down here. Okay, so he's going to move the market, and then he's going to get filled down here to keep price from coming back up. Yeah, it was over 1,300 orders basically. Okay, it went up kind of against him here, but let's see what happened here. Okay, because we haven't seen what's unfolded yet. All right, well, it kind of came down and traded into the large liquidity down here at 42 or 43, somewhere there. All right. So anyway, yeah, kind of a nasty, nasty move there, due to the, the market sell, and then very aggressively placing, very quickly placing the iceberg orders down below it. Okay, different than this one here, where the icebergs are on the bid side, getting filled. Okay, here they're on the offer side getting filled. All right, so anyway, that's what unfolded there. All right, and let's see here. I'm losing my track or place in the chat. Okay, so Rob, does that kind of answer your questions on the both icebergs and in the fill? I want to go over something about divergences in the stops too, and I want to show it actually through Bitcoin and liquidations instead. I think it's a little bit clearer there, but the concept behind it, and the reason I want to go over it is because Tom B goes over it. Just to maybe it gives a little bit different perspective. I just want to talk about the order flow though. All right, so we can look at it from maybe different angles in here. Yeah, so I mean, the fractal stuff is exactly the same, Rob, as the higher time frame stuff. Yeah, it's all the same. It's an auction. All these principles here work on all of these time frames. Okay, so like here's this breakout. This is a small breakout of a range right here. Look at the buying. Okay, pretty strong. Now, where might it go? Well, likely to, first off, like, let's take a look at the structure. Likely up into here, okay, which is already done, and there's liquidity there too. If it can still find more buyers, then likely up to here. Okay, but in the bigger picture here, well, we're in a downtrend, but in the smaller picture, in the kind of getting more fractal in here, this is a range, and we see some selling down here. Here's exhaustion. There's buying up in here. There's more buying in here at the top of this range. They can likely push it and retest other areas up into where it dropped from. Okay, so same ideas on all time frames. Okay, we can look at our candlestick chart. Same ideas. Okay, so a breakout of a range, even this range up in here. There was enough on this daily chart up in this area here to push it through. Okay, because I really was expecting a lot of profit taking up here. And once I saw that day when it just the other day when it started to transact up in here, it's going to go up and it's going to want to test point of control or the top of the range in here, and it's tested the top of the range. Okay, and then we would anticipate there to be some profit taking and maybe some selling engaging up here. Same concepts. All right, just something quick on the divergences. All right, so yeah, like I said, I'll go over it with stops, but I want to go over it with liquidations. I love this tool for crypto. If you guys are crypto traders, this is really pretty incredible thing that you can. The crypto exchange is giving us data when someone is getting liquidated. Um, So that's pretty powerful information. These are liquidations here. Um, these are buyers being liquidated, but the transactions here are sellers. Okay, and so there's a lot in here. Okay, there's 137,000, 19 events. There's 294,000 of 12 events. Okay, that's what's happening in here. That's what these numbers signify. Here's 1.3 million and 12 events up in here. By far the biggest is this one here. Okay, pretty amazing. Anyway, what's going on in here, or what I want to show in here, is divergences in this. So the concept is this: we're looking for the market is just here to facilitate trades, basically, okay, and orders. And it's facilitating them here by people compelled to sell. They were long, they're selling, they're compelled to sell. Okay, they're liquidated. They're not even selling themselves. The exchange is selling for them. So the exchange is forcing their hand out of the market. Okay, they're getting margin calls. They do not have enough to cover. If it can still sell here again, and it's still getting margin calls down here, then likely it's going to continue until it exhausts. Okay, until it doesn't find those compelled sellers anymore. Does that make sense? Okay, in fact, we can zoom in here and you can see it here. Okay, because the way the indicator works here, the liquidation indicator in Bitcoin is it will aggregate if we kind of zoom out. Okay, if we zoom in, it kind of pulls them apart. So look what happened here. Here's our divergence. Okay, liquidations here, a lot, 269,000. It goes lower, and we only get 39,000. Okay, so here it trades back down. It doesn't go into a lower low here, and we start to find buyers. They're starting to find compelled buyers on the other side of the range here now. It's liquidating on the other side, so that means these sellers in here are now being liquidated to the upside. Okay, not much, very little, but the question is, well, what is it like if they can get up a little bit higher, right? What if we can get up to here? Let's see if the market can push up there, and let's see if it can get filled up there, and it can. Okay, so we can see that 29 or 23k, 31k, and then a big one here, real big one. Okay, we can zoom in and really check it out. Geez, it almost looks like this is not even correct. Yeah, that's it. Here's 2.8 thousand. Here's our 1.3 million, and then here's our 17,000. Okay, and we zoom out a little bit, and you can see 3 events for 1.3. All right, now it just hit a huge liquidation in here, real big one. Do we even after an event like that, we don't even get really a retest in here. We just start to see sellers come in. Okay, and they're pushing it now to the downside. All right, so that's pretty interesting event right there. Yeah, so now we're looking to see if we can get we got the buyers on the liquidation here. Let's see, can we push down into here on the sell side down to this 28,080, and get more liquidations down into these areas down here. Okay, this concept here relates or directly to the stops as well. Same idea. Stops, people getting stopped out, they're not being liquidated necessarily, but yeah, I don't think they are liquidations. People are just getting stopped out. The exchange or the broker would just hit market sell and get you out of your position. It might be a liquidation, but it is likely just that you it's your own stop loss order, individual traders stop loss. All right, same concept though. Okay, and if you're looking for, if the market can't press and find more stops, it's not going to find those compelled buyers on the stop run to the upside. We look for sellers to start to come in and try to move it to the other side. All right, and then look for it to trade in a range. There's a couple different ways to look at it. Okay, if you get that stop run to the upside up here, and you get a retest up here, no stops, and you start to see like selling coming in, and you know, big red dots, I would look for it to trade back down to the bottom of the range. I'm sorry, I'm ahead of myself. The first stop would be the kind of most traded level in the middle of the range, and if you get more sellers through that, then the bottom of the range. Okay, again, this sounds complex. It's really simple and straightforward. We're just talking about the auction here and the traders within the auction. Okay, we're not looking for some sort of math puzzle or equation here. We're talking about traders in here at the tops and bottoms of these ranges in here. Now look at this one in here. This is getting really interesting. Sellers have brought it down into these lower areas here. Look at this wall of liquidity down here. Okay, and we're trading into liquidity here and slightly in here, and we're getting buyers now. Okay, back to the top of the range. Now this is where I think I was talking with Slowdown last week, and let me see if I can remember here. About oh yeah, he had a really nice image. I think he put into maybe in the all markets chat, or maybe it was in the general chat, and he really caught a nice reversal. It was beautiful, and noted it really well with, you know, call outs. Now there's something about the turnaround time. It takes a while typically for a reversal, and we're kind of have to look for it. And this is why you'll see divergence, why it kind of works a lot of times. Now, not always whatsoever, but the idea is that if, and we can go to Wyckoff, we can talk about Wyckoff in here as well. We're talking about accumulation phase. Okay, well, sellers are hitting into the bid. They're accumulating on, other players are accumulating with their limit buy orders in here. That keeps absorbing selling pressure. Then we look for aggressive buyers to try to move it as well. Well, if it can't trade down here, maybe it can trade back up. Okay, so here we go. Here is trading into all this liquidity, and that transaction just took place, okay, into this high liquidity. Boy, they're even flipping the book in here. Okay, there's a beautiful transaction and a stop run. Okay, and then larger player flipped the book. This is again, this is dirty stuff. I feel, in my opinion, this is a flip of the book that is not nice, and looks to be prohibitive to me. So this kind of order book flip in here, they trade into this liquidity here, at the same price level. The one thing that actually you have to say is that I guess it's not the prohibited outlined flip by the CME in Rule 575. Here's why: because they did stay in the order book here. A lot of times they'll pull this liquidity, flip from bid to offer, and then also dump with their aggressive order, okay, through that area, and then cap it on the other side. Very much like how this move unfolded earlier with that iceberg, okay, that we saw. Very much like this, okay, except it would happen up here. And this guy wanted to get filled. This guy wanted to be short, okay, and he got what he wanted. Anyway, yeah, the very aggressive flip, and yet we're above it here. Yet we're above it here at 40. Okay. So anyway, to get back to a reversal and why it takes some time, why accumulation and then markup phase. Okay, so accumulation would be, it first starts typically just like this: limit buy orders, limit buy orders, limit buy orders, also iceberg orders. Here's a small one here. Okay, and then once we start to see exhaustion or lack of selling because they've all been absorbed, you're going to start to find some buyers come in, and they're going to reach for the other side of the range in liquidity. It takes a while though for this to kind of unfold. Okay, so in fact this is actually trading to a new range right now. So what if we're going to get a reversal in here, what we'd be looking for first down here is right here at this level at 39 basically, is lack of sellers followed by buyers around 40, maybe a little bit higher, and you can see it's not unfolding, so we're not ready yet. Okay, again, we're still looking for it. Lack of selling. There's some exhaustion right there. Now, do we get buyers up here though? 39.5. No, nothing. Okay, so it's continuing here so far. All right, anyway, this distribution, or I'm sorry, accumulation, is what we're looking for in here, and this back and forth in here. So we noted the absorption. Okay, we do see some buyers come on the other side here, but we're still going lower here. We're still going lower, but we're keeping our eyes peeled though. Okay, so we're looking for a lack of selling, followed by buyers above a specific area here for them to move it back and retest these areas. This is why what I'm trying to outline is not doing it, it's actually starting to trend. What I'm trying to outline in here is the back and forth. Let's say the move down, the move back up, the move down, the move back up, the move down, and the move back up, and it breaks the structure, the move back down, and then the move back up. It takes a while. And on this the transactions in here, we know what the liquidity, we talked about that, there'd be high liquidity in some of these areas in here. Okay, that's getting filled in these areas on the way down. Okay, and then maybe they even chase, maybe they stay in the book here, maybe they even chase and add higher, and maybe they add higher, and then in here we'd be looking at volume dots, big sellers dropping it. Okay, just a pullback in here, small buying, and then probably big selling again. Okay, and then probably starting to get to equal buying on the way back up. Okay, now we're looking for not so much selling, and then in here now we're starting to look for those buyers to come in and shift. Okay, and big buying, little selling, followed by more aggressive buying. And there it is. That would be what we're looking for in here. All right, we'd be looking for this kind of accumulation pattern in here, and there's your head and shoulders pattern in here as well. Okay, this is pretty basic stuff, but we're talking about the order flow within it. Okay, and understanding this, and now we're looking for it to unfold in a scenario in here. Once we start to see that scenario unfold, that's when you can put some trade management around it and look for a higher probability potential move here. Okay, and this is exactly why here divergence happens. Okay, hold on a minute. This is why divergence occurs in here. You got to think about it. Heavy selling. Okay, and let me I'll just kind of outline what our divergence would look like here. Our divergence would look like this. Our CVD would look like this. It would look like some heavy selling, a little bit of buying, heavy selling, and then we see quite a bit of buying, equal or maybe a little bit more. Then we see a little bit of selling in here, and then we see quite a bit of buying. Okay, again, little selling in here, and then you can start to look at these areas in here. I should have moved it over and matched it here, but your divergences are going to show up in here. Okay, it's going to show up especially in here. Okay, maybe in here as well. It might. All right, makes sense. Yeah, I can't catch up with you, Jack. Let's see here. Yep, exactly. Lack of follow-through, liquidity, lower levels. And let's see here. Massive sweep. Yep. Okay, yeah. Oh, so you're looking at that imbalance image. Perfect. Yep. Yeah, tag it. Yeah, I mean, look, we're just getting insight to the orders within the structure here. It just makes it's common sense, basically. That's kind of the beauty of Bookmap is, like, we're looking for these scenarios to unfold in a specific way. We don't have to rely on it being like, well, it's a leap of faith in a candlestick pattern or a head and shoulders pattern, buy above the break of the neckline or whatever. No, you don't have to. You can look at the orders in here and start to understand it. You can look at like an area down here. If you don't see, you see high liquidity here and a lack of selling, and you see buyers come in, you can get in here. You can take some off up here, and then you can look for holding the rest for a runner. You can get back in here again, take some off again up here, and hold now 2 for a runner. Or you can just get in and get in again. I mean, however you want to manage it. That's where it's really up to you, and that's more kind of a bit of an art form as well about how you want to manage your trade that in your account management. Yeah, that's where you want to be real careful. Okay, because like, oh yeah, you might nail one, but then another one comes in, and let's say they dump and swing this way lower really quickly, data or something like that, and you get really hurt. So you'll have to, this is why it takes study, and this is why trading is difficult. Okay, so the trade management part in here and in your account management part matters a ton. Okay, but this is the kind of scenario we're looking for. Yeah, and Jack is talking about in here in the chat about absorption. It just makes good sense. Look at all this absorption down here. Like, do we still see more selling pressure? Yeah, we do. We do. Do we see a lot of buying pressure in here? No, they can't even, they can only bring it up to here. And there's high liquidity there too at 42. Okay, and again, here's buyers coming in right in here, but are they able to lift it up into this area here? No. More sellers. Now we're hitting this 34 liquidity down here, and there's an iceberg. Okay, great. All right, this is, I would say, now we've come down here and traded a lot into this liquidity all the way along, and we're also finding an iceberg and a stop run here. All right, I'd be looking up in here, okay? We'd have to get buyers up here though, okay, around this kind of 35.5. Okay, and then I'm looking for this to be the trapped and compelled sellers to buy up in this area up here. Okay, because it's come down, it's traded into these levels here, and there's, the question is there still more selling pressure? Okay, here we go. Let's see. We got a stop run here. Here's our divergence in stop runs. Okay, we don't have more stop runs. Okay, let's see. Do we get buyers in here? Let's see. Right in here. And the first stop would be up here, and I would take some off. Okay. Now, these are tricky. Like, you know, if you're looking for a reversal, like I said, it's tricky because it takes a while for these things to unfold. So we're looking for, you know, trying to nab one and like maybe reduce some risk up here, you know, something like that. Okay, so let's see it. If we get enough buyers up here back at 33 3/4, we should get the move up to 36. A retest up into here. Okay, we have our reasons to it. Okay, here we go. And now let's see these buyers move it. Okay, I'd love to see more on the bid here and the reaction to that, be more buyers in here. Let's see it. Yeah, all right. Let's get it, buyers. No, not seeing them. Not seeing them. Right, so like I said, these are tricky, but they started to buy, and then our delta indicator here, it started to show some buyers, and then sellers came in. Right here, this is what we saw first, and we're like, yeah, it's not bad, and then look at the sellers come in, right? And then if you aggregate these together, you get a red dot, right? So they're basically, there's just more selling still. We're not ready yet. Yeah, the liquidity jack. Yeah, exactly. There's two types of absorption there: the limit orders and then icebergs, which are basically just hidden limit orders. I mean, basically, the tip of the iceberg is showing. That's it, though. All right, this is actually still on, guys. Like, if we can, you know, we had selling coming in, but I'm looking for buyers up here again at 34, and I'm not seeing them. I'm not seeing them yet. So, but if we do, then we're going to take a look at the order flow and see what the limit orders look like in here. Okay, Rob. Yep, sounds like you're kind of working on your strategies, looking for specific stops in specific areas. Okay, look for it, guys. Look for these buyers up here. There they are. There they are. Now, first stop is probably going to be up here. I mean, it's already traded this liquidity here. There's enough buying pressure though now. I'm looking for them to take it higher here, up to. I would love these guys to be in here. They're not. They pulled. So I don't know. Still looking for 37. I like the level here. It makes sense to me. And then the next one would be 39 up here. Okay. So this is starting to turn into a flag pattern. Impulsive move, pull back, followed by, now we're looking for another impulsive move here up into 37. Joe, thank you. Hit the like button, guys. If you like this, hit the like button. Helps us out a lot. It's like, what do you guys want to go over? Ask questions in here. That's what this is for here. We've got 15 minutes left. Yeah, Joe, Jack, sounds like you've been reading the 575. Guys, you should check it out. Like I highly recommend it. You can visualize the order flow for it. Just do a search in here. You want the PDF. They kind of messed it up a little bit. Just do CME 575 disruptive practice. I want the PDF though. Yeah, download. Let's just put PDF. So it should come up. That looks like it. Let's see. Yeah, that's it. Here, I'll put this link into the chat for you guys. Read through it. You want to understand order flow and what's happening in here. And we can visualize it here during these sessions if you like. But this will really help you read and understand order flow in here. Okay. The other day, a trader was asking me about flip of the order book. It's in here. It'll describe it. It'll describe it. Let's actually look for it. It's called, I think, flipping is what they call it. Yeah, here it is, flipping. Question number 18. What is flipping? And are flipping orders prohibited by Rule 575? And then just, you can understand exactly what they're talking about in here. A flip typically has two main characteristics. First, and let me make this bigger so you guys can see. Okay. First is an aggressor order. Second, shortly after the entry of the order, the market participants cancel the order on the other side of the market, typically at the same price level as the aggressive order. The market participant, for example, has flipped from offer to bidding at the same price level. That's exactly what we've been covering. Okay, so they pull, and then on the other side, they flip the orders. I mean, they say market participant can change their mind or whatever in here, but doing this aggressive flipping disruptive practice in here is not. It's against the law. It's against the rules. Repeated instances of a market participant entering flipping orders that are each large enough to turn the market, sweep the order book. Look at all the, and we can read, we can use all the terminology in here. This is proper, and this is what we want to use to understand the auction in here. Okay, sweep the entire quantity of the order book in a particular price level and create a new best bid or best offer price with any remaining quantity from the aggressor flipping order. Yeah. Anyway, yeah, check it out. It's in the chat there, and I'll put it in Discord as well. Hold on a sec. Hey, slow down. I'm sorry, I missed you in there earlier. Okay. I've been just chatting away here. Yeah, there you go. I'm the regular Bob Ross for the level of artistry in here. That's a happy little cloud. Yeah. So guys, I mean, look at this. I mean, like, there's just a lot of selling pressure in here. We're looking for the potential move in here higher and it just didn't unfold. Like, it looked perfect for a flag pattern in here. We just didn't get it. We see more selling pressure, and they're still going lower. This is another thing that you just want to be aware of in here. Is this a significant level in here? Right, we're kind of have this myopic view right now because we're going through the order flow in a quick pace, and we're looking for something specific in here. However, when we start to merge this with higher time frames, it becomes a lot better. All right, so let's take a look here. All right, so for example, higher time frame here, not bad actually right now, not bad. Here's why. Here's our swing on the hourly. Here's where the buyers came in and moved that market higher. Here's where the sellers are coming in to retest these areas in here. So it's a zone. I would look for first around this 41.27 and then lower here, probably around 41.20, somewhere around there. And then I would be looking for our buyers to come in. So here's our 27 level here in Bookmap. Okay. And look at all this liquidity getting filled in here, and we're seeing our buyers already. Okay, so we're going to get some profit taking. We're going to get some people getting stopped out on the move to the upside here too. Okay, so we get enough buyers. Now I'm looking for 32 3/4 here, next level. Okay, pretty strong buying. So it's not, on these kinds of moves in here after a really strong move, you don't get a pullback a lot of times. Okay, it just comes right up here, and that's what Carmine was talking about the other day. He was talking about these big swing moves in here, and a lot of times you will not get those pullbacks. Okay, it's actually going to give us one here. Okay, there's our pullback. Okay, now are they bidding up in here a little bit? Okay, do we get buyers up in here? Let's see it. Big green dot, and then pull it right up here. There we go. Now here again, we're looking for our big green dots. Okay, looks pretty good. Let's see a little bit more here, and then we're looking for 33. Okay, now let's look at the condition of the order book too. This matters. There's liquidity here that has not pulled here at 30.5, and they haven't really bid up too much. They bid up here. That's about it. Now they're starting to bid up here. Look at that. All right, are we getting our buyers? Yes. Are they starting to pull here? Not really. Okay, it'd be better if they started to pull here, and then we'd look for it to zip up to 33 pretty quickly. Okay, it still looks good though. Still looks good. Okay, can you guys see the difference in here? Why this is like, looks stronger. Okay, this looked pretty good too. Okay, this look at the volume dots here compared to here though, right? And we have a higher time frame that we're looking at, higher time frame level. Okay, so we had to kind of step back and look at this in here and these levels in here, which is a zone. But anyway, just you have to be patient and wait for that. I mean, here also, our 33, 34 up in here, that would be the first area we'd look for it. Selling pressure still came in, still went lower, still took it lower here. Okay, thanks Jack. Yep, you got that image that you were talking about. Yeah. Okay, yeah, I really want to buy. Not really. I'm just looking for the this kind of phenomena to unfold here. That's all. And in fact, I really, to be honest, I really like to just stay with the trend until we see something different. And then for that move to unfold, we're still, I mean, it's a downtrend right now. There's no question, right? So we'd still look for the bigger picture move to unfold to the downside. But you know, during this webinar here and what we're covering, I'm looking for that kind of pullback in here. Yeah, yeah. No, I mean, you know, even in here, like on this move, I mean, I can see it. It makes sense. Like, you know, here's our kind of, whoops, here's our kind of level in here. You know, here's our range, and we're kind of testing the top of it. So, you know, maybe we won't get that flag move back up into here. But if we get enough sellers in here, we're still looking for the trend to continue. Okay, so anyway, we get enough buyers up in here, though. I am looking for the move back up into the top of these areas. All right, well, NASDAQ technologies. Anyway, that's what I'm covering here. You want me to trade live? Yeah, you know, we don't. Here's why. There's lots of reasons why. What are you going to learn about order flow? You know what you're going to be focused on? The little number by the P&L. That's it. You're not going to learn anything. Okay, so we're covering a foundation in here about order flow and how to read it. Yeah, and this is a free room, and this is we find it provides value, and that's what we're trying to do in here. Now you can take this and apply it to anything, right? So look at us back up in here. Okay, so we're back up here. We're finding our buyers. Okay, I'm looking for them to take it higher. Okay, this is how I would trade this for a scalp. Right here, I'm in right here, and I would take some off up here. Okay, if I see these guys pull up here, I'd probably pull my order as well and go up to the top of the range here. Okay, and I would also have a pretty tight stop in here, to be honest. Okay, so I'm kind of calling it live here. I'm in here. Okay, I would take some off up here. Now they already pulled actually, so here, let's just move this. If I can move that quick enough, I would move it up here. Okay, because they pulled and they're still buying pressure. I'm going to move my target up as well. My stop is already at break even. Okay, it's a scalp. Okay, and it is a counter trend, and I'm stopped out, and I'm probably stopped out for a bit of a loss there. Okay, because I'm sure I got slipped on that, right? Yeah. I mean, yeah, and that's it. I mean, this happened. This is exactly what happens in the market, and this is what we, you know, heck, I might have been slipped down to here, to right here. It's possible. Yeah, I would have been. So that would have been a pretty, you know, I'm looking for it. This was my risk reward here, and I had my stop at break even, but it doesn't matter, right? No, this is educational. There's no doubt about it. I like it. I just don't. I mean, once we start getting into this in here, we're not going to be talking about order flow. We're going to be talking about trade management, right? And we're going to be talking about specific setups. And that's and you know what we want to go over here is like you once you start to understand like, or what we want to get across here is people to get a foundation understanding the order flow. The trade management stuff is actually pretty straightforward. Risk reward, trade management, it's not easy. It's pretty straightforward though. You know, that's where the emotions really come in, and that's why I said like I want to avoid the emotions. I don't. Once we have like a take profit, or I mean, if once we have a P&L output in here, everyone just looks at that. Especially, you know, I'm not calling you a retail trader, but I mean, especially retail traders do look at that, and then they go, oh, well, this guy sucks, or wow, this guy's amazing, and just based off my last trade. And it doesn't. The last trade doesn't matter. What matters is the host of all trades. Okay, that you have something that is a probability, has a probabilistic outcome. That's what we're looking for, right? And that's from reading this in here, reading the order flow within it. Okay, so that was wicked move in here. Now you know that's something also to learn from. All right, well, I didn't like that. Slipped about 2 points or so. Yeah, about 2 points. And doing everything correctly here. But this jerk, look what he did. And I would have been caught up in that. Yep. So I don't have any problem of covering any of that kind of stuff. I just want to provide value for you guys for understanding these markets and then applying all of this to whatever it is you trade, any strategy, right? And this is still actually in play. It's just this guy here that screwed everything up. This is still in play, right? You can get back in if we get enough buyers up in here. Still looking for it. We're above where he swept the book here, right? So if we can get buyers up in here, then I'm looking for 35. Yeah, no, I understand your point. No, we've had this discussion many times with others, yeah, it's not a trading room in that sense. I think it's legitimate stuff. I don't want to take that away for sure. It is about trade management though, yeah, how you want to manage all of that. But the understanding the kind of more objective part of the markets here is what's I think kind of key. And then we can adjust our trade management based off of that stuff. So like this player he did it again in here, right? So here it is again, same behavior. See, now this is what I want to cover. Same behavior in here. Okay, so let's apply that now to our trade management. All right, well, I don't like that so much. Well, okay, so if that's going to happen, now we've seen this player actually do this like a host of times. It is likely the same player. And if that is the case, well, then how am I going to, kind of change up my trade management? And that's why I brought up Carmine earlier. He kind of changed his style up a little bit due to the environment. And it was really good to hear that. He's like, no, I'm doing this now instead. And like, I'll take like a, 3 to 7 point loss a couple of times. But then he gets it and he gets like 50 or 60 points. And the S&P 50 and 60 point move is huge, but that's what it's doing these days on these bigger swings. Okay, so anyway, maybe we can get more into trade management, guys, in the future. But again, we want to provide this foundation and understand the order flow, and then that can be applied to anything. So unfortunately, we gotta go. Tom B starts up. He's going to go over volume profile and order flow within his specific areas around his volume profile levels. The uh, Nasdaq Technologies. One of the things I did want to cover was candlesticks and strategies as well. I meant to do this last time, like a week and a half ago, and I just didn't get to it even today. I just got sidetracked on all these things. But we can understand. Let me clean off my charts here. But I think that this can be helpful for a lot of traders because it's so simple and visual. Is look at very simple candlestick patterns here. Understand what the candlestick pattern means, kind of in tradition, traditionally, and then we look for the order flow within it, though, because we have the details here. It's like this move here has a lot of buying in it, but we have this other. Look at this player in between, selling, sweeping the book, selling, sweeping the book. Okay, so that candlestick pattern now has a totally different meaning, right? So I would look for this, for buyers to take it back up above this guy here. This guy's trying pretty hard to keep it down below 34. But if we can get heavy buying back up in here, maybe this guy finally capitulates. I don't know. Maybe not. Maybe we look for the candlestick pattern here to the downside. We can't get above here. Okay, clearly. Can't get above even this one here right now. It's a down candle. Here's a little bit of buying, and it made a lower low here. So the candlestick pattern is telling us basically we're looking for it to come back down to about 27.5, or maybe the lows here, the low of this candle here around 26. All right. So now, what are we looking for? We'll end on this one, and then we'll call it a day here. Then in this pattern in here, what we'd look for is not this. We're finally getting buyers in here. We're looking for sellers here around 30. Okay. Then they can come back down and test these lower candle wicks down here. All right. Let's see if we get it. Do we get our sellers? Yeah, they're starting to come in. Let's zoom in a little bit more. No, back up. All right, so anyway, in between the candles in here, look at the transactions and look at the order book. Liquidity here at 32, liquidity down here at 28.25. Understanding in between and the order flow in it. Same ideas, same concepts as some of the other patterns we were looking at. Okay, so now we're actually getting that first scenario that we went through. The buyers back up here, especially up here around this kind of 33-ish. And then this guy, maybe he'll come in again and sweep the order book again. But I'm looking for him to give up, and then we finally release to the upside here, right? And get a pretty strong move, actually. Okay, so anyway, it's a possible scenario. They're already pulling here. See them pulling? Okay, and we're getting our buyers. Okay, they're also a little bit on the bid here as well. Let's see. Nirav is the passive order sitting there a long time. Well, does it eventually fill that longer term passive order? No, it doesn't have to at all. It depends on the aggressors. Are they trading down to it? Is there enough selling to trade down to those levels? We can probably best illustrate it here in stocks. Okay, so these guys may stay in here all day up here. Okay, we don't know. you know, we have these huge levels in here. Down, look at 65, 67, 67 and a half. Okay, so you know, are they going to get filled or not? Well, we don't know, but do we see enough aggressors up into these areas up in here around 65, 66 and a half? If we do, then the likelihood to trade up to 67 is higher. Okay, they're going for it. It again, it wants to trade up in this area here, right? So that's if we get enough aggressors. Yeah, yeah, Mark, that sweep had the same characteristics as earlier in the session. Absolutely, it did. Yeah, yeah, it did. I think it's the same buyer. It has the same kind of like or seller, the same seller in here. It has the same kind of identification to it. You know, that's kind of their MO, and you'll see that in the order flow. A specific, like this guy here did it twice. Here he did it over in some of these other areas as well. Hey, that's the condition of the markets. You know, that's what it is. So these are the players. All right, guys. Well, yeah, thanks everybody. Hit the like button if you like this. We'll wrap it up. There is no webinars on Friday. There are no webinars on Friday, and we will continue on then on next week. But Tom B is up next, followed by let's see. Today we have John Slazas at 1 p.m. Right after that, he's a longtime crypto trade. Longtime futures trader turned into crypto, and he's been trading crypto the majority of the time the last several years. Okay, so look for that at 1 p.m. On the calendar. Options with Doug after that at 1:30, and then Algo Boys wrap it up at the end with their room from 2:30 to 4 p.m. Okay. All right, guys. Thanks for coming, everybody, and we will see you. Well, I'll see you next week then. Okay. Yeah. Thanks, everybody. Have a good day.